A moment ago, I talked about Royal Bank of Canada. They reported a 13% rise in second quarter earnings, but that was less than analysts were expecting. So the stock has fallen to a 3-month low today. But we are joined now by the Chief Financial Officer, Janice Fukakusa. This is Royal Bank of Canada is Canada's largest lender. She is joining us from our Toronto bureau. And Janice, it's a pleasure to have you. Thank you for joining us. Let's talk about the quarter, a 13% rise in profit, but missing analyst estimates, and it seems to have taken the markets by surprise. So where was the miss, or what was the cause behind the miss?
Hi, Lisa. I think when we look at our reported earnings, we reported over $1.5 billion of earnings and very strong results in our Canadian banking, wealth management, and insurance platforms. Our capital markets platform was down both year over year and on a trailing quarter basis off spectacular earnings that we had last quarter. So I think that if you look at what analysts' expectations were, I think they were expecting for more higher trading revenues. If you look at where the markets were in the latter part of our fiscal quarter, they were not that great, especially in Europe. And I think that what we surprised on the upside was our very strong Canadian banking earnings, in spite of all of the issues around Canadian banking and the consumers deleveraging and that. So we're quite happy about where we stand with our core retail businesses.
Janice, I want to talk about the international banking unit. This slipped back into a loss after posting a profit back in the first quarter. What was going on there? I mean, you've had some problems with your U.S. consumer lending unit. Is most of that loss attributable to the U.S. unit?
Our international banking segment has 3 businesses in it: the U.S. Bank, as you identified, our Caribbean Bank, and our joint venture custody platform. So let me talk a bit about the 3 of them. With respect to the U.S. Bank, yes, we have been losing money, mostly related to provisions for credit losses, and we're very committed to turning around that bank, and we're seeing some very good progress there. In the Caribbean, we're integrating a lot of the operational platforms. As you know, we just acquired a Trinidad bank and added it to our existing Caribbean network a couple of years ago, so it's a work in process. We're seeing some revenue lift there and some good profitability, and we're staying the course there. And then with our joint venture custody platform, it was down because of where asset values were and overall asset management businesses. But as the asset values go up and our earnings are going up there, so I think that what you see is at the cusp, our international banking platform getting back towards profitability. Last quarter, we had a few unusual items that took us over the top to profitability, and we're still focused on returning that unit to break even to slightly profitable by the end of the fiscal year.
And Janice, just to focus for a second on your operations here in the U.S., RBC Bank, based in North Carolina. You've hired J.P. Morgan to advise on the sale. Do you have a specific timeline yet for that sale?
Lisa, I'm not going to comment on the speculation that's in the press, but what I will say about our presence in the U.S. and RBC Bank is that we're committed to progressing through the turnaround, and we're seeing that we're making some very good progress on that unit. With respect to the rest of our presence in the U.S., 2 of our global platforms, wealth management and capital markets, have a significant presence in the U.S. We're growing those businesses, getting very good returns there, winning a lot of new customers, and we're staying the course there and hoping that that will add to our presence there. So I think that summarizes our U.S. presence.
And Janice, you raised your dividend 8% to 54 cents a share. Now, this is your first increase in almost 4 years. Is this a return to a more regular payout schedule like you had in the past, with hikes perhaps every quarter or every other quarter?
That's a great question, Lisa, and I think that you, with all the pressure that we're under with respect to regulatory reform and capital ratios, we're trading very lightly on giving our shareholders returns, making sure we have really solid earnings trajectories, and moving ahead to a more normalized basis. So with respect to our dividend, what you see is the fact that we had, for the 6-month period, 18% earnings growth. We raised our dividend 8%. We're in a very strong capital position. Our Tier 1 ratio is stronger this quarter than it was last quarter. I think we came in at about 13.4%. We have strong adjusted tangible equity. And so given our confidence in where we sit today, we thought that this was the right time to actually reward our shareholders and increase our dividend.
All right, Janice, thank you so much for joining us. Have a great weekend. That was Janice Fukakusa, Chief Financial Officer of the Royal Bank of Canada. That bank reporting earnings this morning, 13% profit rise in the second quarter, but missing analyst estimates.